Good evening, guys. It's Saturday, October 8th. My name is Dave Coker, and this is Talking About Finance. You know the routine, 7 slides for 7 days. Well, me and my buddies, about 55 or so, maybe 60 people now, on a Telegram channel, all financial types, hedge fund types, bankers, ex-bankers, a bunch of us just chatting about finance 24/7. This is the way to manage a market. And I say manage the market because if you don't manage the market will manage you. And how do you manage the market? How do we do that? Since you're listening to this, you already know the answer. We buy when everyone else is buying. We buy when everyone else is selling. We are the constants in this market. We're the cornerstones in this market. We're the foundation in this market. We always buy at the same time, every week, every month, it doesn't matter. What is important is that we behave in systemic and predictable ways. We don't engage the markets emotionally. We don't show fear. The market's down 1,000 points, great buying op. The market's up 100 points, great buying op. It's just like when I was working abroad in some rather unpleasant places. We advance. We move forward. No matter what the action on the ground is, no matter what the crowd around us are doing, we are single-minded. We are predictable. We buy. We never sell. It doesn't matter what the assets are. We want it all. We will own it all. It all belongs to us. And now we see after weeks of decline, the markets are realizing we aren't going away. We aren't giving up. We aren't one of that crowd afraid of a 20% drop. Bring it on. I love the chaos. I love the great prices a sharp correction brings to the table. I really enjoy buying stocks I like at prices I love. And last week, the S&P 500 was up 1.5% on the week. It's now down about 24% year to date. The VIX traded down slightly from 3162 to 36. It's still elevated. And as we talked about before, that's a good sign. The closer to 40 for the longest possible is actually excellent. The 10-year note traded up on the week to close at 3.89%. It's up some 2.3% year to date. Oil closed this week at 95.82. It's now down 0.5% week on week, about 14.2% year to date. And we'll be talking more about oil when we get into the deets. So here we are. Another Saturday night, we look back on the week that was. We're planning our advance. We're going to be deployed for the week ahead. Last week, I bought stocks using other people's money. I also bought Bitcoin and Ripple. So it's business as usual for us. Let's get into the deets and you can see what we're all chatting about. The Telegram channel bounced a little bit this week. We added a bunch of new members, all hedge fund guys I seem to recall. Good crowd, lots of opinions, and especially for us, lots of graphics. So, 7 slides for 7 days. The night is young. We just had a pub dinner. For some reason, I was craving pizza. I don't know what was going on there. I need to hear some live music. So let's talk about the money. Then we'll break out and go hear some live music. So it's really interesting when we see what's going on. Mr. Biden got a big FU from the Saudis. I don't think there's anything more than the Saudis wanting money. I don't think they're necessarily in alignment with Russia. Of course, the Americans are going to try to put it that way. Who knows what's going on really? But all we know is that Mr. Biden got on a plane and went over there. And he basically asked them to increase production. And I think I told you at the time, word on the ground from people who are connected, they were telling me, and I did mention it in the video, that he was asked a great deal about his comments about the House and why he was so negative. And they weren't backing down, they weren't giving in, and they gave him a little bit, but now they've cut. And it'll be interesting to see what happens there. It's really fascinating to look at this. Look at the global situation overall. And the EU, what a mess. My God, they're essentially in a proxy war with Russia, financing Ukraine. I'm not taking a judgment on that. I'm simply saying that is what it is. At the same time, they're buying oil. They're giving Russia money. Yeah, guys, pretty smart to outsource your energy and to become dependent upon any other nation. Amazingly imprudent. And these are the idiots that want to advise and control and dictate how the UK should operate globally. They're a bunch of losers over there, really. It's seriously bad news coming out of the EU. things are interesting going on in the States off some of my private market research here that I push over to my investment clients, my clients, the investment banks, and a couple of hedge funds. And guys, anytime you see a slide in this style, it's mine. And you know, I write on Medium. I bring a lot of them to Medium, maybe, I don't know, 300 words, 400 words on Medium. There's typically about 1,000, maybe, I think this one had about 2,000 words behind it on the notes that I send over Saturday mornings to banks. But we're starting to see inflation expectations temper. Really interesting. If you look on the left-hand side of the chart, from 2012 to 2020, we looked at the 5-year break-even rate, and forward expectation of inflation was predicted to be 169. The red line horizontally traced the Fed's target, 2%. We're in the zone. That's actually pretty good. You can see on the right-hand side, we had a peak in 5-year forward expectations of 3.48% in March, and now we're trending down and very, very sharply. Remember, these are market-traded instruments. So I could update this chart in real time if I felt inclined. I don't, because it doesn't have as much predictive power if I look at it trade by trade, tick by tick. But definitely, as I'm doing here, weekly. Oh yeah, it's very solid, very, very interesting presentation there. And where are you going to be putting your money, guys? Of course, we all know, quote, quote, that America is the best place to put your money. Here I've got stuff broken up into, or I got the globe rather, broken up into 4 broad areas. So from the left-hand side to the right, we've got global performance, US indices, the UK and Europe, and Asia and South America. Back on the farm, we've got an expression, every dog has its day. My God, look at the states. Look at the S&P 500 over Q3. Look at the Russell 2000 small cap stocks over Q3. Even the NASDAQ over Q3. Losers, single digit, not that bad. But how about if you deployed capital into India? If you put money into Brazil? You actually did pretty well. So don't fall into that belief that America is the only place to invest. It's a place to invest. You want to build wealth, you need to have global exposure. I've got significant global exposure, 7-figure sum across various assets. You need to have exposure globally. The primary reason is that we've got low and even negative correlation to America. So even though I have assets in the States, I've got assets in several different countries, and it all works. Because when America is down single digit like this, assets in other nations, I do have exposure to Brazil, are actually up. And they're doing fairly well, assets in those countries. So it's very, very important you start to think out of the box and don't fall into that belief that it's all America and only America is the place to invest. And what about your money? Where are you going to keep it? It turns out that when we look at what's going on in the States, people are starting to draw down capital from savings accounts in a very major way. And we're looking at percentage change, and this is a huge, sharp drop in the amount of money they've got in the bank. Now, my theory is, of course, we don't know what they're doing with this, but my theory is people are getting squeezed by inflation. We also see that credit card charges are going up. We see that savings are falling. People are trying to maintain the standard of living that they can no longer afford. That's why they're pulling money out of the bank. God bless them. That's why they're running up their charge cards. I don't know what to say to these people except get your act together. You can't do this. You can't spend capital like that. Once the Scottish expression applies, money is flat because it's meant to be piled high. For me, once that money's in the bank, it ain't coming out of that bank. There's got to be a very good reason. And I don't mean my current account. I mean the longer term savings, the ISA in particular. But other accounts like that, the money goes in, it don't come out, really. And let's talk about Bitcoin, right? This is interesting because, and we've got 4 slides here all put together about things that I found on the net. Really fascinating. Now, on the old Bitcoin forums, you can see here this guy explained, a Bitcoin economist, okay, right? He explained back in 2011, he liquidated because it dropped below $20. He thought it would never go back up again. It was too risky. I don't know his own personal situation. $20, my God. You mean you can't put down $100 and buy some Bitcoin, or a couple $100, or you can't dollar cost average it over the course of a month or 3 months? Who knows? But on the other hand, we saw in 2015 headlines. My God, same strident forecasts. It fell below $200. I was buying Bitcoin back then. I didn't care. I just kept buying. Like, you guys should be buying, and don't worry about it. It dropped below 2,000 in 2017. Who cares? Of course, look at a chart. We had a nice bounce up after this, but who cares? Because the long-term dynamics are in our favor, guys. And oh my God, here it is again, right? Drop below 20,000 for the first time since November 2020. Who cares? It's a long-term buy and hold. Just buy it and hold it. Don't worry about this stuff. And here we go. This was fantastic. Now, I don't know this woman, Charlene. She is very eloquent. And there was the usual Twitter spat, and some idiot popped in and, well, can you articulate the problem Bitcoin's solving in one tweet? And she did it quite well. And she did it within the character limit. I thought this was so eloquent. Now, I'm not going to read it for you. You read it yourself, but this touches upon what Bitcoin does for all of us. It allows us to free ourselves from government oppression in many ways. We don't have to worry about governments or third parties censoring us and controlling our money. We control our own funds. A common expression in the Bitcoin community is be your own bank. And if that doesn't mean anything to you, DM me, raise a question. I've made lots of videos talking about this. You need to take responsibility for your funds. And there's certain best practices from a security point of view that you can and should do. And there's other ones that you shouldn't do. But aside from that, this is absolutely wonderful. It's fantastic. And yes, I bought Bitcoin this week. I'll be buying Bitcoin again next week and pushing forward. I don't see any reason to stop. But besides, my friends, the halving approaches. If you don't know what that is, go on my podcast, FinTech Facts, or DM me. I'm eager to talk about finance in general, fintech always, cryptocurrencies constantly, Bitcoin forever. Have a great weekend, guys. Get ready to put some capital to work next week. Doesn't matter whether it's $10, $100, $1,000, $10,000. You big roller, you. Put some money in the market. Invest in your future. You'll feel better. Take care, guys.